Hi, good afternoon, students. These are the explanation of the answers for the quiz like I promised you in class. The first question was a depreciation question. I will not read through the question. If you wish to, you can pause the video to read the question in detail. Just to take note that the highlighted points are the key points. So you do need to note that the year end is 31st of March. All right, the year end is 31st of March. You also need to know that this is the reducing balance method. You also need to know that in the middle of the very first year, they bought an asset, a new asset on credit. The first question are theory questions. You can pause here. I've explained in class. The second question is for you to prepare the equipment account for the year ended 31st March and 2018 and 2019. At this point, you will need to note that these are two financial years. The first financial year has a first start date on 1st of April 2017. The last day of the first financial year is 31st of March 2018. It is in this very first year that the business bought a new equipment in June 2017. Now, June 2017 happened in the first financial year. So this transaction needs to be recorded in the equipment account for 2017. In the second year, the first day is 1st of April 2018. This is actually one day after the end of the last financial year. And the last day of the second financial year is 31st of March 2019. Let's take a look at the equipment account. The equipment account looks like this. Accounting rule is plus, minus. So you started off by having a balance brought down on 1st of April. Where did I get this number from? In my question, it was informed that on the 1st April, there was a equipment cost of 40,000. This is the balance brought down on that first day. So that is where this balance brought down comes from. In the very first year, you bought an equipment from Elsa Gold, so you record equipment increase plus or debit by 30,000. The other account affected is trade payables, Elsa Gold. Subsequently, you need to close the account. When you close the account, it's always balance brought down on the first day of the financial year. Nothing happened in 2018. The second year, nothing happened at all, so you don't record anything. And you close the account again on 1st of April 2019. Second question asks you to calculate the depreciation for the equipment for 2 years, 2018 and 2019. The depreciation method is reducing balance method. The formula is cost minus accumulated depreciation times the depreciation rate. First, we need to find out what is the cost of the equipment. The cost of the equipment is in the first year is 40,000, the existing equipment plus the new equipment 30,000. What about the accumulated depreciation? The accumulated depreciation is available in the question. If I look back at the question, I can see that the accumulated depreciation is 22,500. So this 22,500, that is the cost. That is the accumulated depreciation. accumulated depreciation. The whole thing times 10%, you will get 4750. For the first year, this is the depreciation. In the second year, the formula is the same except that the depreciation, or rather the accumulated depreciation amount will be different. So the accumulated depreciation is the total of all the depreciation. So you will need to take the accumulated depreciation that you had in the question, and you need to add on the depreciation from last year. So the original accumulated depreciation plus the depreciation from last year. Whole thing times 10%, which will give you 4275. You notice that the depreciation amount is actually reducing compared to the first year. So that's why it's called the reducing balance method. The depreciation amount will go lower and lower every year. Question E. Question E asks you to prepare the journal entry to record depreciation for year ended 31st March 2019. Now, there are two accounts affected, and this one you have to commit it to memory. The two accounts affected is increase in depreciation as well as an increase in accumulated depreciation. Accumulated depreciation is a plus. That's why credit. I want to remind you that accumulated depreciation is a contra asset, and that is why the accounting rule is minus plus. It's the opposite of asset. Next, you are asked to state the amount which will be reflected in the statement of financial performance. Now, what is reflected in the statement of financial performance? Income and expenses are reflected. Hence, the account that will be shown inside the statement of financial performance is the depreciation expense of equipment. For that year, the amount is 4275. For G, you are asked to prepare the statement of financial position. Now, what is reflected in the statement of financial position? Assets and liabilities are reflected in the statement of financial position. Now, in this case, only the assets, non-current assets are reflected. All right, you want to show how land and equipment is reflected. So the three columns is important. Cost, accum depre, and net book value. Now land is quite straightforward because there's no depreciation on land. You just need to record it under cost. However, there is an accumulated depreciation for equipment. So for equipment, the cost is 70,000, which is your 40,000 plus your 30,000, right? So that is your cost. Where did your accumulated depreciation come from? The accumulated depreciation is the summation of all the depreciation to date. So I'm going to go back a few slides and show you where these numbers come from. Remember 22,500, that was your original. 4750 was 2018. 4725 was 2019. Or is it 4275? I think it's 4275. Yes. Sorry, there is a typo error. This here is 4728. 4275. Alright, so where did these numbers come from? Can you recall this slide? Here they are. This is the original. This is from 2018. And finally, 4279, 4275 is 2019. These three numbers added together is your accumulated depreciation at the end of 2019. Your net book value is taking your cost, deducting away your accumulated depreciation. Question 2. Impairment of trade receivables. There are a few important things to note on this question. Firstly, the financial year end is 30th of June. So every year you will see that the first day is always 1st of July and the last day is 30th of June. Okay. The second thing to note is that this is a impairment of trade receivable question. So you see that there is an allowance of impairment of trade receivables. Allowance accounting rule is minus plus because this is a contra asset. Now on the first day of the year, we see that there is a amount 1330. Now this is the original balance of the allowance. That means from the very first day, there was $1,330 sitting inside the allowance account. Next piece of information that we have is all those highlighted in green. It tells you what is written off. It tells you that on 15th of September 2015, which is the same year as the 1st of July 2015, a debtor called Leong Trading was declared a bankrupt. Leong owed Mabel $500 but can only pay $200 in cash. The rest of this must be written off. So what is the double entry that we should record for this? If you want to write off Leong Trading, firstly, you need to take note. Alright, you need to take note that he will not be able to pay you anymore. So we record Leong Trading minus on the credit side of trade receivables. Next, we also know that he is going to pay cash. Since he is going to pay cash, we are going to record a plus in the debit side of cash in hand. Finally, we know the remaining $300 is to be written off. If the remaining is to be written off, then the allowance will be recorded as a minus debit. Why? The allowance is like a reserve in case your customers cannot pay you. So since your customer really cannot pay you, you need to take out from this reserve called allowance. That's why allowance will reduce by 300. Next thing that they want you to do, they want you to prepare the journal entries to record the adjustments of allowance for 2 years, 2016 and 2017. Now, if you are going to adjust the allowance, you should use the OWE, original, write-off, and estimated. So this is just a way to help you to remember. Now you do need to take note that there are 2 years. The first year is from 1st of July 2015 to 30th of June 2016. This is one financial year. The second year is 1st of July 2016 to 30th of June 2017, the second financial year. So how do we find out what is the adjustment of the allowance? Now in the previous question, we see that this is the original balance on 1st of July 2015. So this is your original balance. We put that under original balance. Now, we also know that there was a write-off. Alright, there was a write-off. The rest that was written off, this W written off during the year. Remember, we say that this is the same year. So the write-off is $300. And in the previous double entry, we recorded allowance for impairment minus 300, right? So what we are going to do now is to continue to have write-off of the allowance. So allowance minus 300. At this point in time, your allowance has 1030 left. But what is the estimated or the ending balance that you want? You go back to the question again, you can see that on the 30th of June 2016, Mabel estimated that her uncollectible debts is 3% of trade receivables. So 3% of 52300. So that is your estimated what you want. You want an estimated of 3% of 52300, which is 1569. Now what you need to do, you need to compare what you have against what you want. You only have 1030, and so you need to increase it, but you want 1569. So you need to increase it by 539. What will happen here? The two accounts affected, your allowance need to increase and your impairment loss will also increase. How does this look like? You can pause and think about it. If you don't need to pause, you can continue. How does this look like in your journal entry? Your journal entry will look something like this. You increase the allowance by 539. Please note that you are only increasing the allowance by this amount, 539. You are not increasing the allowance by 1569. You are only increasing it by 539. So you increase your allowance by 539 and you increase your impairment loss, which is an expense, by 539 as well. In the second year, from 2016 to 2017, how much do you need to adjust your allowance by? Now, the original balance is actually from last year. Last year, you already have a balance of 1569, and that is your original balance at the beginning of the year. What about W? Are there any write-offs in the second year? If you take a look at the question, you will see that there is only one write-off. All right, there's only one write-off, and there are no write-off in the second year. So since there is no write-off in the second year, the write-off is 0. So 1569 minus 0 will give you 1569. This is the allowance which you have now. But what is the estimated allowance that you want? In the question, you will see that you want a 2% of your trade receivable as estimated allowance, all right? So it's no longer 3%, you only want 2%. So that is what is your estimated ending balance. Your estimated ending balance is only 2%, and that gives you 772. So you now have 1569, but you only want 772. You compare these two numbers, right? You only want 772. So what you need to do is you need to decrease your allowance. And when you decrease your allowance, you need to minus 797 to get 772. That means that you have to record allowance reduce, because you don't need so much allowance, by how much? By 797. 797. And you will also record impairment loss reduced by 797. How does this look like inside your journal entries? So your journal entry, you will record allowance reduced, and that is a debit 797. Recall again, I am adjusting this 797, the reduction, and not the final balance of 772. So I only reduce 797. So allowance reduced by 797. Impairment loss also reduced by 797. One important thing to take note is that when allowance and impairment loss increase, this is because allowance has increased. On the other hand, when allowance and impairment loss go down, this is because allowance has gone down. The next question asks you, if the journal entry in B part 1 is not recorded, what will happen? If the journal entry in B part 1 is not recorded, so B part 1 is this portion in 2016. If this is not recorded, what will happen to gross profit? Alright, gross profit, no effect. Why? Gross profit is calculated using sales minus sales returns minus cost of sales. So both, okay, so there is no effect on gross profit at all. Lastly, what are you going to record in your statement of financial position? In the statement of financial position on 2019, you will have to record the trade receivable balance, which is from the question, and the estimated balance, the E, the estimated balance, all right, of the impairment of trade receivables. Finally, you will need to record your net trade receivable, which is actually these two numbers. Trade receivable minus allowance for impairment of trade receivables. This is question 2. Moving on to question 3. Question 3 deals with service fee revenue, and you are informed that there is a service fee revenue received in advance in January 2019. Now, when a service fee is received in advance, it means that you have received the money but not earned. Okay, you receive it but not earned. So last year, that is 2018, you received the money but you did not earn it. So when will you earn it? You will earn it in 2019, because this year you will work very hard and you will earn this 35,000. They also tell you that during the year end 31st December 2019, Jennifer received 160,300 in checks as service fee revenue, of which 15,000 is unearned service fee revenue. So the first question is, calculate the amount of service fee revenue that is reflected in the statement of financial, not position, but performance. In the statement of financial performance, what is recorded is income and expenses. Okay, so income and expenses are recorded here, and that's why we will record the service fee revenue that is earned. Okay, we're going to record the service fee revenue that is earned for the year. So what are the service fee revenue that is earned for the year? Firstly, whatever you received last year but you haven't earned it. So that is your $35,000 from your question. The second one is whatever you have received this year. You receive 160,300. So you add that in as well. Finally, you have 15,000 that you have received but not yet earned. So you need to deduct this, minus it away because you haven't earned it yet. Your final answer will be 180,300. This is the amount that you earn, and you will be shown as service fee revenue in your statement of financial performance. The next question is, what is the amount in the account which is reflected in the statement of financial position? So statement of financial position shows you all your assets and all your liabilities, owner's equity. Alright, so in this case, it is the liability. Alright, you owe your customer work. What work is it? It is this $15,000 that relates to unearned service fee. You owe your customer work. And when you owe your customer work, that is called service fee revenue received in advance, $15,000. Finally, the last question. Jennifer noted that she had received some service fee revenue in the next year for the month 2021, but she did not make any adjustment for it. Alright, so at the year end, she got some money for next year, but she never do anything. So what is the effect of this non-adjustment? Since she received some money but she never make any adjustment, the correct effect is overstated or understated. So if you receive service fee revenue and not earn, and you never adjust it, this is what's going to happen. Profit for the year is overstated. Why is it overstated? Because now you have too much income. Alright, you have too much income. On the other hand, your current liabilities is understated, too little, because you are supposed to record some liability you owe your customer work, but you did not record it, so that is now understated. All the best for your revision. Goodbye, students.